Stocks rebound after Thursday's weak trade with heavyweights in the lead. FMCG and IT, the big gainers, even as healthcare drags.
Sunfarma reports an in-line number but guides for only mid to high single-digit top-line growth given global uncertainties, and a plan to spend more on R&D and product development also dents sentiment.
ITC gains as analysts expect input cost pressures to ease going forward after the tobacco to FMCG major reported healthy revenues but a dip in margins in the fourth quarter. Pickup in exports is an added kicker.
SEBI Chairman Tuhin Kanta Pandey tells CNBC a probe into insider trading at Innocent Bank is on and the regulator is looking into the issue of disclosures. He also confirms the investigation into investments by Mauritius entities in Adani Group companies is continuing.
Reliance Industries Chairman Mukesh Ambani commits to targeting 75,000 crore of investment in the Northeast at the Investors Summit and bats for transforming the region into a healthcare and research hub.
Very good afternoon. You're watching Halftime Report on CNBC-TV18. I'm Ekta Batra and with me is Mangalam Malu. Well, it's definitely turning out to be a better session than what we've seen in terms of, the subdued nature of the markets in the past couple of days. So we have the Bank Nifty, which is up around 0.5% at this point in time. We have the Nifty, which is up around 230 odd points. A lot of stocks which are buzzing around on the back of news. We have an advanced decline ratio, which is in positive terrain, giving you an indication that there's a lot of upside in the broader markets in terms of specific stocks, which we will be covering in the next couple of minutes. But just want to point out a couple of them. Say, for example, an Emcure Pharma, which is up around 10 odd percent. We have Thyrocare, which is up another 4.5 odd percent. Subex, JBM Auto, Tata Chemicals, all of these stocks which are showing some amount of good traction on the upside, both on the volume as well as on the pricing front. Hi, Mangalam.
Hi, Ekta. Yesterday we were down 200 points. Today we're up 240 points. So going good for the market. The question is whether it sustains above the 24,850 to 24,900 mark or not, where it has been finding a lot of congestion and supply. Your portfolios would feel a lot better today because you have nearly 2 stocks advancing for everyone, which is declining. And a bunch of these cash stocks, they're surging. And why just cash stocks? Look at something like a Eternal, which is basically, among the top gainers on the Nifty today. After underperforming for a while, it's turned positive for the month. So that's the frontline index stock that we're talking about. But barring that as well, we have, First Source, which has moved higher. Max Financial is higher. Varun Beverages is another one which is higher. And Angel One definitely has taken the toast this month with a gain of almost 30% for the month of May so far. So a big mover is what we've seen in the form of Angel One. And in the cash names, we have TBO Tech on the back of good numbers, TVS Supply Chain, Affle India and Honasa. Honasa, remember, has halved from the top and now is seeing some bit of recovery. Why is that? Because maybe the tide is turning when it comes to the numbers. In the fourth quarter, the company reported a near 13.3% growth in their revenue. Notwithstanding the margin compression, the street was worried about revenues not coming back. That has come back. Now let's see whether margins return or not. What's good is a couple of the internals. Mamaearth, which is of course mainstay of Honasa, has seen 70% of its portfolio, which is the core portfolio, grow in double digits in important channels. They've increased their presence in retail as well. While they've increased their ad spends and other expenses on account of the distribution reset, we'll have to monitor how operating leverage plays out for them. The underlying volume growth in the fourth quarter has been 21.2%, which has far outpaced all the others in the FMCG space. Apart from Mamaearth, the Dermaco has crossed 100 crores in offline revenue, and we've also seen 30% growth for some of their other brands, which include the likes of BBlunt and Aqualogica. All said and done, after a big cash in the stock from the top, there are some signs of recovery, and the street is latching onto that with a 17% gain.
Okay, all right. So that's a NASA consumer. Thanks, Mangalam, for that. But let's move to pharmaceuticals now. Sunfarma is the top Nifty loser. It's under pressure after reporting an operationally in-line quarter. Net profit was subdued while margins came in healthy. I did catch up with Sunfarma's Group CFO, CS Muralidharan, and began by asking him how the company is planning to use that additional $100 million that they are planning to spend in FY26.
So the $100 million spend is related to the 2 new specialty product Lexelvia and Loxid launch in the United States. And this spend will be covering all the launch-related expenses in the current fiscal.
Okay. You're also increasing R&D spend to 6 to 8% of sales. Where will this incremental spend go?
So we have shared our product pipeline in our press release yesterday. So the clinical trials in respect of those pipeline products are undergoing, and the expenses are intended towards that, apart from the normal R&D spend on the generic portfolio.
Okay. What would this do to your margins in FY26, considering the additional $100 million in terms of spend, as well as the R&D expenditure increasing to 6 to 8% of sales?
See, we are not giving any specific guidance on margins. However, it's important to note that our key growth drivers like global specialty business, India, emerging markets, and other business are well positioned to grow. We continue to focus on cost and operational efficiencies, remain competitive, and thereby aim to improve profitability. Having said that, the $100 million expenses related to the launch of 2 new specialty products needs to be factored in overall modeling.
All right. Well, let's talk about the top line revenue guidance then, where you have indicated it's high single digit top line growth, mid to high single digit top line growth. The company has mentioned global uncertainty as a reason for that. If you could elaborate.
So in our earnings call, we did share our revenue guidance for FY26, which is mid to high single digit. This revenue guidance is after considering various regulatory uncertainties prevailing in the United States and other places, and that's the reason why we are given a wide range of guidance.
Okay, so it's trying to factor in what could happen with the tariffs?
See, we are not able at this point of time to understand the real notification as and when it comes. We'll be able to read the fine print and interpret it. As of now, there is no clarity in terms of the regulations, neither for tariff nor for other aspects in US. As a result, we are not able to measure the same.
Okay, so this is not product related, this is more environment related. So there's a chance possibly of increasing the guidance as the year goes on, because traditionally you've always guided for, high single digit to low double digit revenue growth.
I think we need to wait for getting more clarity on some of these specific matters for us to understand better.
Okay. Your specialty sales, they grew around 8.6% year on year in Q4 versus estimates of maybe a double-digit growth. Were there any slower sales this quarter when it came to your specialty portfolio? Was it in line with what the company was expecting?
So the global specialty sales for the Q4 was about $295 million, up by about 8.6%. However, if you see the FY25, the global specialty revenues were $1.2 billion. Up 17.1% year on year. And more important factor to reckon is that the share of specialty sales to consolidated revenues on the full year basis has moved to 19.7% current fiscal as against 18% the previous year. And I think it's important also to note that we have been consistently increasing the share of specialty revenues to the consolidated revenues every year.
Okay, but are we expecting this kind of growth going forward in FY26, single-digit growth in specialty sales per quarter?
I did mention that all our key products in specialty are well positioned to grow, and we expect to maintain the growth trajectory for the specialty portfolio.
$1.2 billion is your exit rate for FY25. What can we expect for FY26?
See, this has been factored in overall revenue guidance, what we are given.
Okay, all right. What is your sense on Ilumya's run rate, given that there could be incremental competition coming into the space?
We stated in the earnings call that in respect of any biosimilars on the Ilumya, at this point of time, we do not expect any headwinds. All
right. MM2 is basically one of the drugs under development. You're looking for a partner for it. Could you give us more details?
See, we did a strategic reassessment of our pipeline, and based on that, we have come to the conclusion that we will look for a partner with whom we can develop and launch.
All right. By when?
So there's no timelines as such. First, we need to look for the right strategic partner who will be able to work along with this and bring this product to the market.
All right. GL0034, which is basically what you're looking at in the diabetes space, is that an equivalent or a competitor to, say, the Mounjaros and the Wegovy's of the world?
So, in terms of we feel that the product is attractive and competitive profile compared to the type 2 diabetes products that are in the market.
Okay, so that would be a GLP-1 inhibitor.
Yes.
All right. And it would be on the innovation side.
Yes, please.
All right. How are you playing the semaglutide opportunity where it goes off patent in multiple countries next year?
So we have stated that we are well positioned to launch the product both in India and emerging markets.
All right. And what kind of competition do you expect in this space?
See, the product is quite attractive. There are other companies who also given their commentary in terms of their position to launch. So at this point of time, we are focusing our preparation for the launch and to be successful on this product.
Talking about acquisitions, you have around $3 billion of cash on your books. So any utilization plans, any M&A on the horizon?
We continue to look at strengthening our specialty portfolio through the in-licensing opportunities. What we have seen in the last 3 years, we have acquired Concert Pharmaceutical through whom the Lexel-V came in. Recently, we are undertaking the transaction of Checkpoint through an Unloxed is coming. As a result of which, we'll continue to look at portfolio in the area of onco, derm and ophthalm to further add to portfolio.
The size?
We have got war chest in the balance sheet subject to the product being attractive and we will be able to do well in the market. I don't think size is a constraint at this point of time.
What is the risk of launching Lexel-V in Q2? You do have a litigation. It will be an at-risk launch.
It will be at-risk launch, which I've shared yesterday.
Okay. Any contingency plan for it?
Not required at this point of time. Since we have a favorable judgment, we are preparing for launch.
What is your expectation when it comes to tariffs?
Too early to comment. I said at the beginning of the call, we yet to see the fine print. As and when it is finalized by the US government, then we need to interpret the regulations and then decide.
Are you considering onshore manufacturing?
Not at this point of time.
Okay. All right. So it's not on the cards. Just a quick update before we let you go. Update on Halol and the Dadra and Mohali site.
We have mentioned that we have requested the agency for an audit in Halol. As regards Mohali and Dadra is concerned, we are still working on the remediation processes. And as soon as we complete, we will inform the agency.
All right, those are some comments coming in from the management of Sunfarma, the stock among the top Nifty losers in today's trading session. With that, we'll slip into a short break, but on the other side, a lot more pharma talk lined up for you. The management of Mankind Pharma joins in to discuss the quarter gone by and the year coming ahead.
Welcome back. You're still tuned into Halftime Report on CNBC TV18. Well, let's get talking to one particular company. Mankind Pharma is the next management on the show. Revenue growth came in line, led by domestic and export markets. To discuss this and more, we have Rajeev Juneja, who's the Vice Chairman and Managing Director of the company, joining in. Mr. Juneja, hi. Welcome to the show. Good to see you in. Let's start with the margin guidance. That was a little bit of a disappointment to the street because you've guided for around 25 to 26%. The street was probably working with around 27%. It's a small difference, but nonetheless. What is your guidance on margins based on? And is there a chance of probably surpassing it or increasing it?
Hi, Ekta. Good morning. And whenever we go for any kind of a guidance, we make sure that we basically come up to that. Rather, we should surprise the market. And historically, we have always been very, very conservative company. And in the last couple of quarters, we have done plenty of, improvements, changes. You can call it commercial excellence. A lot of changes have happened in the last couple of years in Mankind, couple of quarters in Mankind. Based on that, we can say that whatever we commit to the market, we should come with flying color. That's one reason we have given 25 to 26%. Even last year, you see what was our guidance. It was 25 to 26%. We came to 26% around.
Okay, all right. So you are probably looking to maybe increase it as you go along. Just wanted to, before we talk about the BSV acquisition, actually, let's talk about the BSV acquisition because that's linked to, your margins as well. You had indicated that, there would be synergies between 12 to 24 months. Where does that stand in terms of synergies with BSV? And what is the launch pipeline looking like? I know you've increased your market share in gynecology, but overall, what would the launch pipeline in women's health and gynecology look like now?
Look at this synergy, look at this BSV. In the month of October, we just took this company in our fold. And whatever initial steps are very, very important once you take over a company is just go inside, try to integrate, understand the company. It takes some time. And one of the most important thing we have done is that we have brought top leadership changes a bit as far as the domestic is concerned. We brought some leader from the topmost companies in gynecology and brought over there. BSV also had one more portfolio that they took from TTK that we have taken in the fold of Mankind prescription side because if you just look at BSV has two sides. One is high entry barrier, IVF, anti-venom, vaccine side. And the second side, they are just Me Too generic products, branded generic products like we promote that basically has come to Mankind side. But these products are iconic brands, Ursopan and Lactea. These are very, very good brands. So we have two jobs in our hand. One, making sure that these products, which have come in Delhi division of Mankind, reach to maximum number of customers, and we can exploit the full potential of that. The second basically is what? Making sure that BSV's great products, amazing products, have good penetration. We can reach to the masses. That we are doing. And as far as the new launches are concerned, it's very early to speak anything about that.
What about the diabetes product? You did say that you are looking to expand out there and you've made notable strides in R&D for a molecule for obesity plus diabetes. So I wanted your thoughts on how far are we away from the launch? What's the progress on out-licensing, etc.? That's point number one. And are you also looking at semaglutide? You said sometime next year. What's the plan here?
The first question's answer basically is what? It is in phase 2, and I cannot tell you in how many months, but we'll try to just fasten up the process of phase 2, and that's one reason it is not happening in India. We are basically very hungry, very aggressive. We just want somehow that this product should come in the market because initial results are quite encouraging, and that's one reason we are putting our bucks on that particular product. As far as the semaglutide is concerned, this product will get off patent next year, and we are quite hopeful that we'll get in license. We'll get this product to be launched next year.
How big is the opportunity here? I mean, what we're trying to understand is from a Mankind Pharma standpoint, what's the revenue target, market share target that you would have? What is the size of the market here in India, and how much would you get?
Cannot give any kind of projection on that, but we are very, very happy and excited that we will be launching. And as far as the opportunity is concerned, there's a tremendous opportunity because this is not a kind of a product. This will not remain a kind of a product which will remain in the hands of only topmost doctors or specialist doctors. This will go down the line as well. Gynecologists, physicians, surgeons, diabetologists, everybody would be needing. Every place this product would be having some kind of a scope. And since our reach is very, very deep, so we see that we're a very appropriate company to launch this product.
Okay. Well, just wanted to touch upon the OTC segment. You grew around 15% in FY25, and it seems as though the changes that you had made in this particular segment are now probably showing up in terms of numbers. Give us a sense in terms of what the new launches are, and are you going to probably better this 15% growth?
we basically say, we'll always be in high teens as far as the growth is concerned. And we took one product from Panacea, Nimulid, that is in launching stage. Initial response is very good. Plus, in consumer side, it's never the new launches. It is always whatever brands you have built. How can you just increase the sales of those products by launching different SKUs? And that we are continuously doing it. Whether it's Praga News or Manforce. Gas So Fast is one brand we are very, very bullish. It is growing at a very, very good growth, 26% plus. One more product where we are just having a lot of expectations, that is OVA News. On these products we're working right now.
Okay. Now, just coming to the debt part of it, you have debt of around 5,784 crores. You have reduced your debt, say, on a Q1Q basis, because you did have that hotel that you sold, the Mahananda Spa to Chalet Hotels for 530 odd crores. Any more such transactions, and what would your debt reduction plan be?
We said in the starting of our quarter that the debt to EBITDA ratio would be less than two times. So it stands right now 1.8 times. Don't have any extra kind of a side business or any subsidiary which can be hived off. Hopefully, by the end of 27, early 28, this will be totally repaid back.
Right. And final question, domestic business, which crossed about 10,000 crores in FY25. You have a target of growing it by 26% in the next year in FY26. How much of that will come from chronic? How much of that will come from consumer? How much of that will come from BSV? If you could break that 26% growth up in terms of what the contributors of these growth will be.
See, as far as the chronic is concerned, we basically are making all the efforts to make sure that chronic really grows. Last year, our chronic has come to 37% of our total sales. BSV will do its own bit. But hopefully, we'll be growing more than the IPM, 1.2 times to 1.3 times next year. These are the expectations. OTC is doing fantastic.
Okay. Just on the acute, how much are you expecting it to grow vis-a-vis chronic?
As a whole, we can say that to IPM and this as a whole, this will be 1.2 to 1.3 times total revenue. In chronic side, we can expect 1.3 to 1.4 times, and the rest will fall on acute side.
Okay, all right, Mr. Janeja, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Mankind Pharma, that's stock a bit subdued, down around 1% odd. Well, we take a short break. Up next, we'll focus on the FNO trades at this time.
Welcome back. A couple of stocks are picking pace. TBO Tech, like we pointed out at the start of the show, TVS Supply Chain, Juniper Hotels, and we have Reliance Infra as well. Reliance Infra is the one that should actually come up for you. A lot of the gains happened in just the last 10-15 minutes or so. The stock has spiked. It was flattish for most part of the day. Then between 11 and 12, it saw one wave of an up move, and now as we speak, it's moved to the high point of trade with a big gain as well. Cosmo First is the other one, which is up 6%. But good time to get in the FNO perspective on the market. The frontline indices are bouncing back after a decline that we saw yesterday. The Nifty Bank, and the mid-cap index. The Nifty Bank up around 0.75% after having closed at the 20-day moving average in yesterday's session. It recovered in the last hour to close past that, and the Nifty is building onto those gains, led further by IT and FMCG stocks. The mid-cap index in step with the frontline indices. Good advanced decline ratios as well. The green and red lines are far and wide apart, with nearly 2 stocks advancing for every stock that is declining. Let's see where we go from here, largely because, the 24,600 call writers are now being taken to cleaners. The premium has spiked out there, and it's very early days in the next week's expiry. It's day one itself. But as the markets moved higher, put writers have gotten some strength back. So 24,800 put seeing a lot of writing, 24,700 put seeing writing as well, telling you that there would be support around 24,550 to 24,600. But on the way up, 24,900 call writers are equally active, telling you there would be sustained supply around 25,000 to 25,100. And if the market sustains above 24,900 today, then there could be case for further short covering as well. Also, watch out for the put-call ratio, which has moved slightly higher to 1.15, typically indicates a topping out at around 1.25, 1.3. So that's something we'll watch for. And a lot of stocks in focus, short covering, fairly active in Varun Beverages and Eternal, the erstwhile Zomato. And a lot of shorts added on Container Corp, though the stock has recovered from the lows. Good commentary coming in from the management in the conference call and to our channel this morning as well. It'll be very interesting to see whether it sees a bit of a bounce back from here on or not. The stock has been an underperformer, lower today, some shorts. Let's see whether they unwind or not. But with that, we'll take a short break. On the other side, we have another management, another pharmaceutical company. We have Strides Pharma joining in for their fourth quarter earnings.
Welcome back. Well, let's get talking to another pharmaceutical company now. We have Strides Pharma Science, which is the next management on the show. Revenue has grown by around 14%. Growth was led by strong performance in the US, new launches and efficient execution as per the management. We have Arun Kumar, who's the founder and the non-executive chairperson of Strides, joining in now. Mr. Kumar, good to see you in. Welcome to the show. Well, if you could just start by talking about the FY26 guidance, because you have met FY25 guidance. What are you now projecting for FY26, say, when it comes to revenue, when it comes to your EBITDA, as well as your debt to EBITDA and US markets?
Hi, Anka. Thanks for having me on your show. We actually as a company don't give guidance, but we had quite some turbulent times in the last 3 years. So we guided to an extent where we wanted to be sure that we were executing right. And in the last call, we decided that we would not provide a guidance. But we have had a strong FY25. We are very confident that we'll grow from there, both on revenue and EBITDA. And our focus is obviously the balance sheet, where we believe that our strong cash flow generation that we had this year can be replicated, further deleveraging. At this time, we are very comfortable on the strength of our balance sheet, the fact that we have reduced our debt from a high of five times to under 1.9. And I think we've got lots of headroom to even grow the business from here based on the strong operating cash. I think our exit run rates would be a good base to set targets for the going forward years. And a larger outlook that we have to achieve a 400 million sale in FY27-28 in the US is on track. It's overall been a great year, a great comeback year, a fantastic teamwork, and we've delivered on everything we said we would. And I think we'll continue growing from there.
Okay, so I just want to narrow down on this $400 million by FY27, FY28 in the US. What is that predicated on? How many products are you looking to launch? You have, plans of reintroducing 60 products, which are dormant at this point in time. But would it primarily be led by generic drugs, or do you see some opportunity in terms of exclusivity, etc.?
So we have two parts of our US business. The first part, obviously, is our niche products in the generic space. More than 40 of our 70 products that are launched in the US, we are market leaders for many years. There's very little competition in these programs because they are either hard to make or hard to get APIs. That will lead us to get to the 400 million target that we have set for ourselves. This obviously, as you rightly pointed out, would be from our library of products. We now have about 260 plus ANDAs. We have only commercialized 70 of them. And while we lose some market share in products, as is the case in the US business, we'll continue to add new programs and new products to get to the 400 million. So we're kind of fully ready for the 400 million in terms of portfolio. We have launched 5 to 6 products in the last year from the old portfolio, and we are very measured in terms of timing and pricing. So we wait for the right opportunity to get our products launched. But we've now, since the last 2 or 3 quarters, been talking about what after the 400 million generics play in the US. We've called something called Beyond Generics. And Beyond Generics is really addressing your question, is more to 505(b)(2)s in Speciality Pharma. Our first product was filed in that program, and they are mainly controlled substance drugs in different domains and formats, which only our New York facility can produce. And that, again, is a very specialized area which we are very focusing on. So it's nasal sprays and 505(b)(2)s.
So let's take that further itself. Your exit run rate in the fourth quarter was close to around $330 million in the US. Do you think that that is a level that one can expect in FY26 before you move to FY27, FY28 and get to that $100 million per quarter sort of run rate in the US? And beyond generics, beyond $400 million, do you have an aspirational target here, say by FY30, FY32? Are we looking at $1 billion?
Our 400 billion story is based on niche average revenues of $5 to $7 million per product. We work on the low end of the value chain, which is very attractive for us, and we think we have everything that's required to get us there in place. On the beyond 400, typically our average product filing size is between $25 and $50 million of revenue goals. So it's a very significant shift in our strategic play in the US. And they're obviously more exclusive developments. And like I said, they're mostly 505(b)(2)s. And there we haven't put a revenue number as yet. But what we're doing is will almost be 5 ANDAs equivalent to one product that we have in the beyond 400 play. So yeah, it's completely differentiated between.
How many products are you eyeing then, if you can back calculate that?
Well, I think we would have a portfolio of over 25 products. Not everything will be very successful, but they're very expensive developments. Each of these developments are significantly higher than a regular ANDA. So yeah, so I think you'll see that playing through in the next 12, 14 months when we expect to receive our first product approval in that space.
All right. Arun, you're mentioning the US markets. You've been looking at the US markets for years now, from different administrations. And now you're working with the possibility of tariffs coming through, onshore manufacturing being encouraged. I heard you mention a New York facility as well. So take us through where you stand when it comes to the entire situation in the US on tariffs as well as onshore manufacturing.
Yeah, so at the manufacturing high volume generic prescription products is not feasible in the US. That's not going to happen. It has to be significantly high-end products. Cost of manufacturing is between 3.5 to 4 times more than Asian manufacturing. So to assume that generics can be onshored overnight, unless supported by very significant subsidies or a capital allocation from the government, the US government, I don't think you'll see a lot of generic products moving into the US. It's just not practical unless the market is willing to accept a much higher price. At the same time, there are very nice niche businesses that require US manufacturing, and therefore our US plant in New York kind of fits that segue very well. And we are excited about that operation because we've now crossed over $100 million of revenues from that plant, which also means that producing in the US makes sense. But then the limitation is the portfolio, the type of products, and typically they have to be products which are not necessarily generics, but has to have something generic plus. So I think there's a lot to wait to play out. My personal belief is that generics will not get severely impacted by tariffs, but it's a very hard call to take in with the ambiguity in the geopolitical situation, especially with tariffs. I think the next 90 days will be crucial when everything settles down. For us personally, as a company, we have been a contrarian play forever. We solidly believe in the US opportunity, and they've been growing nicely and roundly in that market. I'm sure that if tariffs hit our business, there are opportunities for us to absorb some costs, but not impacting our financial goals. And the rest will have to, unfortunately, be passed on to consumers. But that's what I think most companies will have to do, end up doing that.
You want to give a quick on your margins and your net debt as well? Because I remember, at some point the margins did touch that 20% mark as well, were a multi-quarter high. Thereafter, you said they were sustainable. They're meandering just a little below that 20% mark. And with the kind of launches that you've planned...
Don't forget that these numbers are adjusted for a very high margin soft gelatin business, which was carved out into one source. And that's what obviously delivered the $900 million of value creation to the Strides shareholders. We are very confident of getting to the 20% even in our base business, but it's a process of time. We still have some more work to do on our operational costs or under recoveries, which is standard. Network optimization stuff all of us in the generic industry do live by day in and day out. I'm very confident that we'll be closer to the 20% in FY26.
All right, Arun, we're going to leave it on that note. Thanks very much for joining in and giving us your perspective on Strides. So that's the stock. 723 odd rupees, down around 1% odd. We'll take a short break. But here is some good news for our viewers. India's business news leader is now a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.
Welcome back. Let's get you some earnings expectations. Then JSW Steel reports its fourth quarter numbers today. Nigel joins in with the key expectations. Nigel.
Well, that's right. Let's look at the consolidated numbers then. For JSW Steel on the top line, we're expecting a more or less flattish to a mildly negative number of around closer around 3%. That's because steel prices have been under pressure. On the EBITDA front, though, there could be some improvement. It should jump up by closer around 7%. The profit number all over the place would be going with the number of closer around 1,470. Most brokerages are in the vicinity of around 1,300 crores to around 1,700 crores. Well, moving to the factors at play, the volumes will be higher, particularly for the India business, should be higher at the Vijayanagar unit because that's got commissioned. The problem is on realizations. Year-on-year basis, it'll be very, very low. It'll be a big degrowth out there. So that's why on the top line, we're expecting a bit of a negative number. On a sequential basis, though, realizations have jumped up by closer around 1%. The crucial number to track for JSW Steel will be the standalone EBITDA per ton. And this time around, we are moving with an improvement of close to around 900 rupees on a sequential as well as on a year-on-year basis. So it should come in the vicinity of around 8,800 crores. How is that possible? Because of the cost efficiencies that they've been focusing on. Coking coal cost as well should cool off, like we have seen with Tata Steel as well. They got some benefit of that. And some realization improvement will help them on a sequential basis. The overseas business could continue to report a loss, but those losses should come down from the loss that we saw in the previous quarter. That's quarter 3, FY25. The things to track from here on, the most crucial aspect will be what is their commentary on the liquidation of the Bhushan Power and Steel asset, because that's going to be top of mind. How much money can they get back? Will they rebid if it comes up for auctioning? Or can they, make it through with a penalty or so? We'll have to hear out the management's commentary on that. Besides that, demand, pricing trends, as well as overseas operations, that's something that we'll be tracking. We'll expect the numbers post-market hours today. Back to you.
Okay, all right, Nigel. Thanks very much for that. That's on JSW Steel. We take a short break. Manisha Gupta will be with us next to take us through what she's tracking in the commodities space.
Welcome back. Joining us on the show now is Sandeep Bajoria. He's CEO at Sunfarma Group. Mr. Bajoria, hi. Thank you so much for joining in. I want to first talk about the edible oil imports into India. We do understand, and we've reacted to this so many times, that Feb imports of edible oil into India were the lowest in 4 years. But then March and April have seen some strength. How are you looking at May? And what's your sense now going forward?
Manishadi, you're right. January, February, March and April, all the 4 months together, average import was only 9 lakh tons, which was one of the lowest in the recent history. But coming to the May import, I believe it's going to be something around 11 lakh tons, 11.5 lakh tons. June will go up to 12.5. And July, August, September, October, we should reaching about 13.5 to 14 lakh import. because that's going to be really off season for us. Domestic crop availability will be lower, so we require imports for meeting our needs. So I believe India has been a very sensible buyer recently. They never overloaded themselves, and that was a good thing Indian importers did. Most of the time you over import and then everybody makes a big loss. Doesn't make any sense. So that's what the situation is now.
Mr. Bajoria, I also want to talk about the kind of consumption pattern that India has. I mean, we know it was not very too far away when Indian PM had spoken about, lowering consumption of edible oil in the country. And there has been a lot of data floating around since then as well. 1960, and I quote a report here where it says that edible oil consumption was 3 kgs per capita, which stands at 23 kgs per capita right now. How do you look at this consumption pattern, and where do you see it going from here?
Manisha ji, over the years, we have evolved as a country, as a population, and our standard of living has improved. But the way of eating has changed. So now, as per our estimate, the consumption is around 18.5 kg per person per year of the vegetable oil. Then we consume some ghee and other fats also. So, which 23, which you are referring, maybe totaling up the oils and fats and everything together. So, but however, in this consumption pattern, we have seen when the prices went up because of the duty hike last year in September, every year we used to have 3% growth in consumption. But instead of that, we saw about 3-4% decline in consumption because the oil, which was selling at 90-95 rupees per kg, went up to 130 per kg. So that's the reason. Definitely, India is a very price elastic market as far as veg oil is concerned. So we saw that kind of a degrowth in consumption. Anyway, but I think now prices have come back again to lower level from 135 kgs. The prices are something around 120 rupee a kg now. So this is a pretty equilibrium price, and at this price, I believe consumption is going to increase, and that's why we're going to step up imports in coming months. And Prime Minister said in his own way is right that whatever way we can reduce the consumption, that's okay. But some reduction was possible, but beyond that, it is not workable because after all, you cannot change your eating habits overnight. And when a lot of in population also we have the rich, and then we have middle class, and then we have people below that. So the rich consume something around 40 kgs per person per year. The middle class consumes around 23, 24 kgs per year, and the poor consume only about 10, 12 kgs per year. So that's a very skewed thing. So in fact, the poor class needs to increase the consumption, and the middle and the higher class needs to reduce the consumption.
And would you say it's very geographically done as well, because Western India consumes more edible oil rather than what Northeast or North does?
Yes. You see, the Gujarat is very famous for fafdas, doklas, and all kinds of fried food. The highest consumption is in Gujarat of veg oil in India. So that's when I said 40 kgs. So Gujarat is much above national average, and Prime Minister's message is more targeted towards Gujarat than anywhere else. States like Uttar Pradesh and Bihar need to step up their consumption. So anyway, I think in a lighter vein, we all need to be healthy. But at the same time, we all need to take the daily supplement, whatever is needed for our body.
Right. It's a lighter vein, but the message is definitely, heavy-headed. It's an important message. Thank you so much. But as you said, fafdas, and it might be, very oil-rich, but it's tasty, Manisha.
I think that is where it comes in from. 40...
Absolutely.
You're saying what? Gujarat is more per capita. How much is it?
The Gujarat per se, if you say as a state, the per capita consumption is 27 kgs per person.
And what would Maharashtra be?
Maharashtra would be about 21, and national average is about 18.5.
All right, there you have it.
I thought Maharashtra would also have, its own share of vada pavs and batata vadas, etc.
No, but still Maharashtra is not that much as Gujarat is there. So as far as edible oil people, Gujarat is a paradise,
Would you have a seasonal breakup? Because during monsoons, a lot more fried food is consumed.
Yes, you're right. You're absolutely right. In summer, the edible oil consumption reduces. In the month of May, we have the lowest consumption of edible oil because it's so hot and people don't want to eat fried food. And even in a lot of states in India, there's a lot of mangoes coming in. So people eat roti and mango, veg oil and vegetables. So, but in monsoon season, you are right that you want to eat pakoras, you want to eat vada pav and everything.
It's becoming about food every day.
This is one of the
segment.
most fulfilling conversations I've had, Manisha. I have to say this.
June, July, the consumption goes up again. And
I
then
can bet on that.
Festival season starts. Thereafter, festival season starts from August onwards till Diwali.
For edible oil industry, this clearly is a start of a good time. Mr. Bajoria, thank you so much for joining in. And yesterday it was pizzas. Today it's pakoras?
Today it's pakoras. So yesterday pizzas were sent to our office. Let's hope pakoras come to our office today or not as well. But as we talk about that, we'll just talk about it. I'm telling you, we won't eat any of these because he said you have to take care of your health as well. Take a short break, come back, business lunch. You watch business lunch while we go and look for some pakoras in our office.